All right, hey guys, Sam here. Mid morning on a beautiful Saturday here in Austin, Texas. A lot of interesting things happening across many of the majors. So I thought a good opportunity to go into some more detail and perhaps look at a few trades that seem to be setting up rather nicely. Now, of course, we'll start here with Bitcoin. Now, this is our the reference chart that I've been using over the last couple of weeks. This is the currently I've got the 8-hour Bitcoin to the dollar on Bitstamp. And Bitcoin has made it difficult to get a clean entry if you're not already in. And we've tried a couple of times, and I've posted 4 or 5 videos now looking for an entry where we have statistical probability working for us and good structure and the kind of retracement relationships that we'd look for as we go down to smaller time frames. And I suppose it should not be a surprise that this is it's difficult to get in here. You have, there's a lot of emotion going on here because we have the greed factor due to the Bitcoin gold fork that's coming, and we have the nervousness of longs that are cautiously watching this, knowing that we're somewhat extended here, but greed will often win the day. So you have the market here. Retracements are being absorbed very quickly. Now, I've got this little box here that I've drawn over the last couple of days looking for an entry, and I want to, I'm going to take you back to something that I've posted before as to why I'm drawing that. So I'm going to post this underneath the video, and I'll give it to you as a reference. It's from my buddy over at astrocycle.net. He's got a really interesting website. But not to digress, this is actually not his. He's just posting it up there. This was eSignal did this, and this was statistical analysis over many, many millions of waves where they could come up with some data that's useful to us. So we can look at where the majority of wave 4s retrace before moving on to finish the 5-wave count. And we can see here that between 24 and 30% of the time, a wave 4 will retrace only 15% of the time. Right, the vast majority are between 30 and 50, right? Which would offer the 38.2 and the 50. That's the most common. You're getting 60% odds there. So while in extreme moves like we're seeing in Bitcoin, very shallow wave 4s do happen, it's not the probability play. And down here again, you can see a deeper retracement in a wave 4 is also less likely, right? So this is also only 15% of the time that we go beyond the 62 or the 618, right? So which would contain our little pocket, which is the 618 to the 65. This does happen. There are a few markets that have just done that in a wave 4. So you have to consider all of these. But if we're just going after the probability play, this is where we want to be, between the 30 and the 50, right? So if we go back here, you can see I've drawn that. Here's our 38.2 and our 50. So, that we got close to it here, came a little shy here on this. This was on the 13th. We didn't quite get to the 38. Again, it's been very difficult to get in. Now, we're going to look at it on a smaller time frame so we can try and make sense of the complexity of this correction, because it's not been an easy one to trade. And I've posted in the last day or two, several alternate counts to try and get a handle on it, looking for a way in if you're not already in. Now, we've got some targets that I drew up here yesterday that you'll see here that we had a nice cluster of 1618s from these swings, and I'm going to show you. We've also here, of course, now I'm drawing here from our wave 2 low to this swing. If we do get this retracement, then we get the negative 23.6 here as a target and the negative 618 as the extreme target. But, a good thing to do often is to pull back, get to a longer time frame, and start working some fib relationships off of the major pivots. So we can see the very clear 5-wave sequence that we had here, followed by our nice big ABC. So just because it's an exercise in trying to get a handle on targets as well as trying to identify where we might see additional resistance. So one thing we always want to do is look for fib relationships between these major pivots. So I'm going to draw up a couple of them. So here I'm going to take just the fib retracement tool, and I'm going to go from my absolute beginning of this structure to my 5 high. Now this is, I suppose I'm hopeful that this doesn't surprise you too much, right? So I don't know how many times I reference that in video. Where do we go here? From my absolute low to my 5th wave high, we come down right into the pocket between the 618 and the 65. Now take a look at where we are. Okay, we know that the algo target, the first target, the major target for them, is the negative 23.6, which is right. I mean, we're sitting there right now. Now, does that mean that's a top? It's so far it has not been, but it's certainly a point to note. Right, so you take a look and say, well, do we have some extreme upside? Well, we can look at the negative 618, which is sitting up here at just shy of that 69.33. So just shy of 7,000, we've got the other extreme. So these are not to be discounted. Right? Now let me put that in context so you can see how effective that's been previously. So I'm going to do the same thing. I'm going to just go to my retracement tool. I'm going to pull from my wave 2 low to my wave 3 high. Right? Common relationship between the two, right? Where's the 4? Comes to the 38.2. Now look what happens here. Now, coincidentally, right? So this is to the tick, Now, take a look at where the negative 618 of that pull is. Right where we sit. Again, I'm not calling a top. I'm just saying there's a reason why we're stalling here. Now, add to that, we've got the 200% of the pitchfork offering some structural resistance. Now, up above, we have the negative 100 here, and we've got this window up here where we're starting to get some confluence higher above. This is up, closer to 7,000. So again, not calling a top here. We know we've got a cluster here of 1618s from 2 swings. We got the negative 23 that remains to be seen if we have a low in. But we're getting some really interesting overlap here, and it shouldn't be a surprise that we're getting a reaction here, and we've gone into now a rather complex correction, which is why it's been difficult to get in, because there's indecision here. Algos, certainly some are taking profit. We have new people that are trying to get into market. We have nervous longs that are cautiously hopeful that we continue to roll here. But the reality is we're at an area where we're very likely running into a combination of profit taking from algos, new people trying to get into the market, any sort of weakness is being bought aggressively, and so we've got this confusion. But it's just a good idea to put things in context and say, well, how has the market been responding at prior pivots when we hit these levels that we know are significant? Now, let me take this down to a smaller time frame so we can try and get a handle on it. Now, I'm all the way down to the 15-minute, and I've posted this a few times in terms of possible counts that are unfolding here, and it's been very difficult and very complex to get a handle on it. So right now, keep in mind that this is potentially these are changing all the time as the market responds. So you can see what I have drawn up most recently here. Currently, the best I can get a handle on it, we're putting in some sort of complex 4th wave here. So, the complexity implying that we're going to get more than just a simple ABC. So there's a rule in Elliott wave trading that rule may be the wrong word. There's a tendency for corrections to alternate from simple to complex. It's the rule of alternation. So we have a very, very simple retracement here in this second wave. Now we have a very complex. And in fact, I've got a WXY here, which sounds complicated, but it's really just connecting two ABCs. So what we can do is start to identify where we have 3 waves and where we have 5 waves. So the reason I've got this now here as an A wave is because of the 5-wave structure, followed by a 3-wave structure. Yes, it goes to a new high, creating an expanded flat. We come down, so we get an ABC. If I put the wave on that, you'll see how I've got this. We get the ABC. It's an expanded flat. Okay? Tricky to trade. Right? You don't know it's there or that it's happening until you see this low taken out. Well, I got to reset it a little bit. But that's exactly, again, go to your Elliott Trading 101. That's exactly what an expanded flat looks like. Doesn't make it easy to get in, and we were trying to get in a little bit lower, and it just hasn't given it to us. Just hasn't been there. So it continues to be a process of waiting for high probability entries. Now, let me take this off just so we don't confuse the chart. Okay, so interestingly, the Vegas wave has contained beautifully here on this whole ride up. Here's the two. See how it contains. That's definitely something you want to have up on your charts because it's a great guide, and you will often see the market come down and tick it or go just between them, right? So again, that's the 144 EMA and the 169 EMA, and then the baseline is the 233. All right, so looking here, okay, what can we ascertain from this? Well, we get some sort of impulsive structure here, right, that looks like some sort of a diagonal, right? So because we don't get classic impulsive structure. So, it's a tentative 1-2. We do get a good retracement here. So we go from low to high. Where do we go? Right. The market is it's consistent, right? So we go just a few ticks on the other side of the 618, right between the 618 and the 65, just as we did on the absolute low. So now we've gone impulsive here. Well, let me word of caution here. We have gone into a 5-wave, but it's not impulsive because we have an overlap here in the 4th wave. So it's some sort of a diagonal, or we're going to end up relabeling this. We don't know where this stops. We're still rolling here, pushing the high of this as I record this. We don't know how this is going to unfold. We may have a 1-2-1-2 because right now, this being a diagonal, it implies a 1 wave or an A wave into a leading diagonal. This is a red flag here because of the red flag, maybe the wrong word, but it's a point of note here that we've overlapped the 1. So we don't have a classic impulse, which would have been the preferred setup given this as a 1-2. So we want to watch this cautiously. And we can see we're already, look where the 3rd wave goes right to the -23. We retrace. Now look again. Here's the 2nd wave to the 3rd wave. 50. We go between the 50 and the 618. That holds it. Now we're carving out again another diagonal type of structure. So it's choppy here. It's choppy. It's not a clean count. But given the 5th here, look where we are. Here's the -23. Okay, so it's incredibly technical, but you can't call a top anywhere. What we're waiting for is a decent retracement that we can catch, and what's a lot of times for us trading in the States, this is happening overnight. So right now, potentially we're putting in some sort of a top here for this 5-wave structure. If you're not in, you got to sit and wait. You got to sit and wait for it. So if we are completing this move here, and we don't know for sure that we are, but we're just waiting for retracements, right? So here's an ideal spot that we would love to see. So why do we want to buy it down here? I take you back to our reference here. Now I'm going to go to our wave 2. Right? This give them all to you. Statistical data on wave 2. Only 12% of wave 2s stall at the 38. right? The 38.2 gets only 12% of them. 73% go between the 50 and the 618 or the 62. Right, and then again, only 15% go deeper than that. But we've seen it many times that a wave 2, as the short sellers are pushing for a new low, will get to the 786. Right, but as long as it stays internal to that retracement, that's the setup for a wave 2, and then we know the likely outcome is a push to break this high. Vast majority between 50 and 618. So as we go back here and look at this, if you know, here's 50 to the 618, 50 to 618. Now we're looking for this structure to complete. We can't really quantify whether or not it's a 1, 2, 3. That doesn't make sense because of the overlap. So we might have 1, 2, 1, 2. Either way, the safest approach here is to stay with your probabilities. So if I'm going to go to our high here, we want to look here between the 50 and the 618. That's what we're waiting for, if we can get it. Now, interestingly, we have the wave 1 swing here, which might offer some support, but we also have this one here. So you have potential here. This is the shallow at the 382. The odds play is down here. So, you know, an ideal entry would be here at 56.70. Do we get it? Well, we don't know. We don't know. We're still going up. This could turn into 1, 2, 1, 2, 3. I mean, we could go much, much higher. But, you know, all we're trying to do is where can I get a reasonable entry with, you know, and contain my downside. So, you know, it's requiring patience. Now, I'm sitting here on a 15-minute chart, and, you know, many of you may not want to trade in that kind of detail. So, if you want to, you know, stay on the larger time frame, well, you know, here it is laid out for you. We're trying to get a retracement down. Why? We're trying to get that retracement in that high probability zone between the 38 and the 50. But it may not give it to us. It just may not. It just may not. So, you know, it's really a judgment call to the individual as to whether or not you want to go with the lower risk play because you're anxious to get in. You know, if you're not already in, you make that decision knowing that you're adding risk. So, you know, you may end up having to trade your wallet rather than the market structure, which, you know, doesn't always work out for the best. But, you know, you could be looking here for even, you know, a modest pullback here. You know, you could take the swing level here. You could take the 58.90. Possible, but my suggestion would be wait for more clarity here before you anxiously look for the push. You know, there's definitely going to be uncertainty here until we get to the fork. We don't even know the actual hard date on the fork yet. We know it's sometime next month, but we don't have a hard date as to which block they're going to pick. So, you know, we sit and we wait, and you know, the bias certainly is going to continue to the long side, but it would just take, you know, one little spark, and you know, you won't know what it is. You know, what would cause the sell-off. It would just take, you know, one little move or a flush, or somebody comes in and, you know, sells some volume to get all the nervous longs out, right? Because big money doesn't want to pay this price, so they'll look for an excuse to shake out weak longs. That could drive the retracement. The other thinking that, you know, is a little bit longer term is that there's going to be a sell-off once we get to the fork, as people anxiously take profit and look to sell. So, you know, you got to be cautious with this. You know, it happens to me all the time. I try and keep these under an hour or under half an hour, and I'm 18 minutes in on Bitcoin. All right, since it's a Saturday, we'll go a little bit longer than usual. Let's see if we can get Ethereum and Litecoin done, because these are finally starting to show signs of life. So here's Ethereum. Now, let's see. So we ended up with a bit of a crazy triangle correction here. You know, this has been really difficult to trade because we've had an unconventional, complex correction. Ends up being some sort of a triangle. Doesn't really matter for us right now as we sit as to how this ends up being counted by, you know, Elliott academics. It doesn't really matter. You know, bottom line is, you know, can we now look and see some sort of an impulsive breakout? We did see the 5 wave here. That's why, you know, this is being considered a triangle, a corrective triangle. But now we've broken out. We've got some sort of an impulse underway. So now we can get our arms around this. Now we had some, take note, we had some targets here that have now been violated. So we still maintain an internal retracement. From swing high to low, we are still internal to that. Now we're coming up onto the 786, which would be an extreme. So, a break of this really starts to make the bullish case look quite good. But we're still, we're not there yet. We haven't had the break, but we can definitely see some targets here that are starting to develop. So, right now we've got this very nice channel here that's containing the market. Let's go down to a smaller time frame and we can start to get a handle on where we are and where the next opportunity to get long might be. So, let's see. I'm going to go to let's go down to a 1 hour. And then I'll blow this up. Okay, so here's our triangle. We come into a double bottom, bullish signal, right? So can't break the lows, and look at the reaction. So we get some sort of a 1, 2, 3, 4. We get overlap, so it's a diagonal, so it's either an A or a 1. In this case, turns out to be the 1. So we want to pay attention to that low. So where do we where do we go? Well, let's evaluate here first, as we would always. There's the 1 wave. We go right to the 50. And now we've ripped, we've ripped to an extreme. Here's the negative 618. We've gone to and through that. So at that point, I'm going to take that off. We want to look at the relationship in a third wave. So I'm going to pull my alternate price projection tool. I'm going to go to the length of the 1 wave and project it from the 2 wave. Now, we can go over back here to our reference, right? We can look at our third wave projections and look at the statistical data here. And we can see that 45% of the time, the market will push in a third wave between 1618 or 162 and 175. That's the majority, right? 30% of the time, it will go between the 175 and the 262. So we get 75% of the time the market going at least to the 1618, right? So it would make sense for us to identify the 1618 and the 175 and the 262. Those are likely targets for a strong impulse move like we're getting. So let's go back to the chart here. So let me pull that. So if I take this, if you see this here, here's the 175 and the 1618, right? So you can see that right in this little box right here. So we're to and through that. So where's our next target? Next target is the 2618, which sits right here. See this gold line here? I always do the fibs, the true 618s in gold, right? So that's sitting up here, which happens to coincidentally be in line with the 786 of the entire retracement. And I've got the 100% of this swing, right? So you can always, if you can't figure out where they're coming from, you can always go back to the edge and see where they pulled from. So if I go swing low, swing high, here's my 50, here's 100% of it. Okay, so you see how we build a little cluster here? So we've got the 786 of the internal. We've got 100%, the negative 100% of this swing low here for an extreme target. We've got the 2618 of this third wave. So we've got likely some resistance that we're going to run into up at this level, and we're just pushing up to it now. So if this is going to be our third wave up here, right? We don't know that it's stopped yet. But since I'm going to take that off, since we're to and through that, now our target here is the 2618, which we know the market will do. Whoops. Try and get this one because that's potentially up here. We can't discount this as potentially a B wave just yet. But so now all I'm doing now is pulling from. Let me take it off so you can see it. So take that off just to declutter the chart. So I'm going to my retracement tool. I'm going from my 2 low to what is currently labeled as a 3 high. We don't know if that high is in yet as we're sitting here pushing up against it. And we're looking for what? The high probability play for our fourth wave. So that's why I've drawn this box here. That's the 38 to the 50, which would be, in our wave 4, Wave 4, 38 to 50 gets 60% of the time. Okay, so that's where that's coming from. So we draw the box and we sit. Now that would be right with the channel line, the midpoint of the channel, which would be structurally, an excellent spot. Now, we're putting into, so you can break the wave down. Remember, it's waves within waves. So we may have, some sort of a subdivision here. I'd have to go down to a smaller time frame. It doesn't really matter. At some point, we're going to get a pivot here that we can work from. It wouldn't surprise me if we're up here in the box that we've drawn, where we know we've got a confluence of fib zones, and we get a little pause there, and then we wait, because you may have to move this higher, right? So that box, if we end up here, then the box goes with it, right? Then we look for that. So that's kind of where we are with Ethereum. It's definitely, we've had a major break here, finally starting to break, looking for a 3 high, then we wait for the retracement. Remember, we're always looking for 2s and 4s. Right, 2s and 4s. If that retraces, then we get the push from the 4 wave. Ideally, I'll put the wave on it so you get the idea here, right? So this is what we're looking for, the 5th wave, right? We can't call the 3rd top in yet, but once we get that and we start the retracement, then we can start to do some targets on the 5th wave. So if we go in, if we're able to get in here, we have some targets that make sense. And you can see how, I've kind of randomly drawn this, but we would go, it would be not unusual for that to go right to the edge of the channel. So kind of the same thing. We wait for the retracement. Hopefully we get the high probability zone. We're getting entry here. Low risk, right? Because we can put our stop, under the 6.5. So reasonably low risk, looking for that push up to the 5th. Okay, and then that's not necessarily a market top, but it just completes this 5-wave structure. For all we know, that's a 1 wave of a much larger dynamic on a larger scale. We don't know. But it's a tradable event. All right, how am I doing? There's 26 minutes. Let me go over to Litecoin, because we're also getting similar action here in Litecoin, finally starting to break. So now I've got a lot on here. I understand that. So it's always easier to recognize what's on the chart when you've drawn it yourself. So I know when you're watching this, it's a little hard to get a handle on all these lines. So let me break them down for you here so that it doesn't confuse and you can kind of get a handle on it. So again, we are still within an internal retracement of this swing high to swing low. So we naturally want to be considering the likely targets for internal retracements. So here's the we drew this box here. The 50 was right there, and we had the algo target of -23. We had that little box, and interestingly, that's right. We go a little bit beyond it, but that's that contains the wave 3 high. We've got another box up here because we've got our very commonly seen reaction space between the 618 and the 65, and then we've got the -618 from this pull swing low to swing high, right? We came to the 50. There's the -23. We get the reaction there that catches the 3-wave high. Here's the -618 for an extreme off of this pull. So we've got, again, another cluster here. So breaking it down on a smaller time frame. Now let me go to a 1 hour. Right? So you can start to see this. So we're calling this our 3rd wave, at least at this point in time. Now, take note of a couple of things here. I'm going to pull this off just for the time being. Now, I'm going to just take out my retracement tool. I'm going to go from my 2 low to what is I've currently labeled as 3 high. Okay, now we go down, we go deep here. We go deep. We go beyond the 6.5. But interestingly, the wave 1 swing high here holds the market. Also, take note, it goes literally, it splits the Vegas wave. Splits it, right? That's a really powerful indicator. You'll be absolutely astonished how often that contains the market. You can see it here. You can see it here. We come right to the Vegas wave here, particularly when you have a wave count underway. Now, that you look at that and go, well, that's unusual for a 4th wave to go that deep. Well, is it? Is it? 4th wave. Will retrace between 50 and 62 15% of the time. We went down, damn near we went just to about 68, 69%. But 15% of the time, that's a wave 4. That's exactly what we got here, right? So we went past the 65. So that percentage of the time, so perfectly valid trade. So we can look at that and say, okay, well, there we go. So here's a 3. We want to look at the relationship between the first wave and the 5th wave. So I'm going to take my alternate price projection. I'm going to pull from the low here to my 1 wave high. Look here, we're to and through. I'm going to go from the 4th wave looking for a relationship into the 5th wave. And look now, we're to and through the 618. So we're absolutely into extremes here. Into extremes. So with that, we got to look at maybe we're pushing from a different pivot. So it's a constant process of trying to find the puzzle pieces. So let me get my tool here. So I'm going to go from the absolute low. Now this starts to look more interesting. So now here's the 100%. So again, all I've done is take the absolute low to what I've labeled as the 3 high, and I'm going to this major swing low here because this was significant. Significant pivot. Significant pivot. Swing high to the low. Here's the 100% of that. Right? So that's a point of note. Here's the 127 of that. Also a point of note. Here's the 1618 up here. So we've got some upside targets. If I look, let me take that off, and I'm going to take that off. So we start getting some targets, but take note here that within this, remember, it's always waves within waves. This is the fractal nature of the wave of wave trading and of the way waves unfold. It's waves within waves. So if we have a true 5th wave, we can expect a 5-wave subdivision into the 5th wave. Well, let's look at that. So I'm going just to my retracement tool. If this is the low here of my 4, this is my 1. I've come right to the 50. Here's the negative 618. Here's the negative 100. Here's the negative 1618. Right? So we get clustering here. So potentially we have a 1, 2. Let me label it so you get the idea. So potentially we've got a 1, 2, 3 underway. We don't know that we have a top yet. 4, 5. Right? So that's what we're looking at in the 5th wave of this structure. You see that? Until we get a pivot, we don't know that we're there. Now we could, because that's the negative 618. So that's a contender. But until we get the retracement, we don't know that we're there. What can we do? We can definitely put a marker on the wave 1 high, because if it's going to stay impulsive, we'd expect this to hold. So does that make sense? Well, I'm going to take this off just to declutter the chart. Let's go from our wave 2. What's currently labeled as the wave 4. Again, we don't know that that's the swing yet. So if we want to look for the high probability zone, what are we looking for? We're looking for the pocket between the 38 and the 50 for the wave 4. That's our high statistical probability entry for a wave 4 going to a wave 5. Right? And that does start to look logical and start to make sense. So you could do something like, put a channel on this and say, well, if we're gonna roll like that, that would give us some targets up here. Again, we don't know that that's the swing high yet. So an entry down here, that would be, Litecoin sitting at, where are we at, 65 now. So we'd be an entry somewhere in the zone. If I split the difference, call it 62, with a target up here at 72. So there's a 10-point trade right there. And nothing says that that's the top, but that's hitting singles and doubles right there, right? It's not swinging for the fence on every trade. It's so a good approach here, if the market gives us this entry, and we don't know that it will, but if it gives us that, if you have enough size here, you can take a partial profit here, expecting that you're going to get some sort of retracement. Because just because we hit a 5 of a 5 doesn't mean that's the top. This could all just be a 1, 2, 3 before we go again. Right? So it's waves within waves within waves. That's the fractal nature of wave trading. You're looking for that subdivision so you know where you are. Otherwise, it's just kind of random chaos. It's a way to organize the data so that you can look for high probability entries. That's why the wave theory is worth using. It gives you a way to quantify what you're seeing, where it gives you a rule set so that you can say definitively, based on my rule set, that I know that this is an impulse wave, and that if it's going to break this low, well, it's no longer an impulse wave. It has to be something else. I relabel it. If I relabel it into another, maybe it's an ABC, or we're going into some sort of a complex correction, or it's a diagonal. These all give you structure with which to organize what you're seeing, and gives you a rule set. And those rule sets come with probabilities, so I take you back here. Right, so wave 4, we know that 60% of the time we're going to go between 30 and 50. Right, so where else can you get those kind of odds? Right, that's the whole point of it, is to play the odds when the odds are in your favor. Right? As I've often said, the difference between gambling and speculating. Gambling, you sit at the table knowing the odds are against you. If you're a professional speculator, you're looking for opportunities where the odds work for you. And if you do this consistently over time, those odds will work in your favor, as long as your money management is disciplined, as long as you're not taking massive losers when you're wrong. Tight on the risk. So if we enter here at the 50, where's the stop? Other side of the 618. Why? Because the vast majority of wave 4s will not go that deep, or they won't retrace over the wave 1 high. So there's no reason to ride it down. There's no reason to write it down. If that happens, this count is invalidated. Something else is happening. Now we evaluate the structure and the probabilities of that count. That's the idea. That's why it's worth doing this. All right, there's 36 minutes. All right, I've gone long. All right, I do have some other majors that are really setting up nicely. So I'll put that into a separate video. I'll wrap on this one. Okay, guys, talk to you later.